What is going on, investors? Hopefully, guys are doing well out there. Time to keep earnings season rolling right along. When we take a look at Qualcomm Incorporated, ticker symbol QCOM, after reporting the company's earnings yesterday, the stock is popping up about 6.5% today. Now, over the last year, the stock is up about 4%. Year to date, though, we've actually seen this stock, just like basically every stock out there, give back a lot of those gains, okay? Down about 20% year to date. When we get over and look at this from a technical perspective, it's making a pretty predictable move. So we'll talk about that here in a second, but I do want to get into these Q2 earnings, which really came in and they were absolutely fantastic. Revenue came in at $11.2 billion. That was 41% year over year growth. They beat expectations by about $600 million. They beat on that earnings side, and we'll talk about that more when we run through the financials. We'll take a look at really how well of a business that Qualcomm is running. But I think what has the stock popping in the after hours is the fact that they gave an update on Q3. They're expecting revenues to come in between 10.5 billion all the way up to 11.3. Again, they just printed a quarter where they did about 11.2, so that they come in over and towards the high end of that guidance. They'll not only grow year over year, but also on a quarter over quarter basis. And when we look at the consensus for that quarter, you're sitting at about right around $10 billion consensus. Even the high estimate for revenues in the upcoming Q3, again, we're going to walk through Q2 numbers with Qualcomm here in a second, but I do want to focus on Q3. The high-end estimate was 10.6 billion. They're coming in on their high-end estimate over at Qualcomm at 11.3. So they're really beating those earnings estimates. The other thing that I want to point out with Qualcomm is I'm seeing over the next really 2 years with the company, analysts are only projecting between 11 and $12 billion worth of revenue. And in fact, we're going to grow at the low single digits after about 2022 on this company. And again, I'm not necessarily saying this is right. I'm not saying this is what I would expect necessarily, but I'm saying this could potentially be priced into the stock. So if you are somebody that doesn't believe that this company is going to see their revenues essentially stall out at a 10 to $11 billion over the next couple of years, well, obviously there is an opportunity here. Now, when we look at this from a traditional valuation metric, I think it does support the idea a little bit that those single digit earnings are priced into the stock, because when we look at a price to sales multiple of Qualcomm on a 5-year chart, while it hasn't bottomed out, we saw this stock bottom out like a lot of stocks in March of 2020, down right at 3 times sales. And quite frankly, it appears anytime Qualcomm gets in the vicinity of about 3 times sales, buyers tend to step in on this stock. Currently, the stock is trading at about 3.8 times sales. And so I have to believe that this kind of a low or mid single digit growth rate is what is factored into the stock price to a certain degree. Again, if you disagree with this, well, obviously there's opportunity there for Qualcomm to continue to grow. Now, in terms of the most recent earnings report, we've got our 3 months ended here. We have that $11.1 billion. They rounded up here to 11.2. Again, that was 41% year over year growth, when last year you were sitting close to about $7.9 billion. For the last 6 months, you went from 16 up to this 21.8. They've also done a really nice job over at Qualcomm from really controlling those expenses. You went from 5.7 last year on the expense side up to about 7.3. Again, when you grow this by 40%, you'd expect your expenses to grow as well. If they didn't, the stock would be absolutely ripping to the upside even more than it is already today. That gives you operating income in the most recent quarter at $3.8 billion. So you had this $11.1 billion worth of total revenue. You minused off this $7.3 billion in cost, and you're left with $3.8 billion worth of operating income in the most recent quarter. Last year, you're sitting at 2.1. On a 6-month basis, paints an identical story. You went from 4.7 up to the 7.7. This is just a company kind of in a train, and it's rolling down the track, and it doesn't appear anything's going to stop it. And even as we move into Q3, that appears to be the case as well, especially if they come towards the upper end of this guidance and these earnings as well, which they expect to come in between $2.75 upwards to 295. The street was expecting 259. I don't know if the street's just wrong on this or Qualcomm's just pushing forward a lot of demand, but this company seems to be firing on all cylinders. When you pull all the way down to net income, you printed $2.9 billion in the quarter last year. On a quarterly basis, you're at 1.7. Things are looking really good from a balance sheet perspective, as you'd expect with those types of earnings and those types of results, basically flat over the last 6 months in terms of their cash performance. We'll show you where some of this cash is gone. Obviously, this company has generated a fair amount of cash flow, but obviously not a ton of it is flowing up in here to the top line of the cash. And we'll show you where it goes when we get to the cash flow statement. Long-term debt sitting at about 12.1. It's down a little bit. Short-term debt ticked up. It looks like this long-term debt simply rolled over to short-term debt. They did a little bit more with that when we get over to the cash flow statement. Speaking of the cash flows, here we are. We pulled down a 6-month net income number. Some of you might be wondering, where did I get that net income number? You come in here to your statement. This is why I tend to go statement of operations first. I take a pit stop at the balance sheet, and then I come here to cash flows, which I'll show you in a second. The reason why I always start with statement of income or your profit and loss statement is you pull, here's your 6 months ended. Here's our most recent quarter here on the left-hand column. You pull down all the way to net income. This is called the bottom line. This is why you see 2 lines here. It essentially recognizes the profit that the company made after they pay everything, all their income taxes, all the interest on their debt, obviously all the salaries and employees and all the cost of goods. You get down here to $6.3 billion. Last year, you were sitting at 4.2. So on a cash flow statement, you'll pull that net income number down to the top of the cash flow statement. Because in a cash flow statement, you get to add back things in that are non-cash. But on a net income side, according to accounting principles, you have to recognize things like depreciation and amortization. Again, this is $834 million. This is not $834 million that Qualcomm had to reach into their pocket and actually pay, unlike maybe an employee's salary or for raw materials to make their goods. This is a non-cash charge. In cash flows, we get to add that back in. We know that also about stock-based compensation expense. Again, they're issuing shares of Qualcomm. I don't necessarily agree that you get to add this back in dollar for dollar, because I sure as heck believe that the employees over at Qualcomm and pretty much anywhere across the world won't work for free, but they are paying them in stock and not cash. So you get to add that back in on cash flows. You come down here after all the add backs and subtractions, you come back here to $4.75 billion with a positive cash flow. Now, it paints a little bit different story over at Qualcomm, because notice last year on a lower net income number at $4.2 billion, you actually printed higher cash flows at $6 billion. Those went down to $4.75, again, despite $2.1 billion being added to our net income side. I see that we had a much larger inventory build in the most recent quarter. When we zoom back up to the balance sheet, I did want to show that to you. We do have inventories here with Qualcomm. They went from $3.2 billion up to $4.5 billion. So another $1.3 billion added to those inventory side. I went and dissected their inventory. The vast majority of it is work in progress inventory. There's 3 types of inventory. You have raw materials, you have work in progress where they're kind of putting it together, and then you have the finished goods, which are essentially, basically ready to be sold. The vast majority of Qualcomm's inventory is work in progress, and I have to assume this is work in progress for the Q3, which absolutely came well above estimates, especially if they come to the high end of these estimates. They'll be well above the street estimates for their earnings. They're doing a nice job generating lots of revenue over at Qualcomm, and when you have lots of revenue and it's beating expectations, well, your inventory is going to stack up. That's going to hurt cash flows in the shorter term. Longer run, obviously, those sales are going to generate even more cash for the company, so that's just something to keep in mind. Now, in terms of the rest of the balance sheet, they had some short-term debt. They basically refinanced it because they had some proceeds, and then they repaid it here. They repurchased about $2.1 billion worth of common stock. They were sitting about 1.9 in the period before. They paid some dividends as well. So that's where a lot of this cash flow, when you look at the cash flow in the most recent quarter, the vast majority of it actually went to a share buyback and dividends and inventory. Quite frankly, if I'm an investor in the company, I want them to build up their inventory so they have more sales in the future. And if they want to do a buyback and a dividend, that's all good too. Right now, you're getting about a 2% yield on this one. They pay $3 a share. That does separate Qualcomm, in my opinion, over and above some of these other chip makers, which pay either a very paltry dividend or one not very big. And that really, really makes this a really solid investment. Now, from a technical perspective, paints a little bit different story. We're actually in a pretty steep downward channel. We are in a sideways consolidation range. The bottom of the range is down here at about 122. The top end of the range, look, the top end of the range is 190. I think there's an area though here closer to about 160. We're basically right in the middle of that range right now at about $144 per share. I am recording this during the session. Who knows how this thing ends up? But from a technical pattern perspective, this is a pretty steep downdraft that this stock is in. We see a lot of stocks in this downdraft at the current time. A technical break would be essentially two green candles outside of this upper trend line, something looking like this that would show that you've kind of technically broken out of this, and you could potentially be starting maybe at least in the very, very shorter term. You're talking maybe over the course of a couple of weeks, maybe some kind of shorter term uptrend. You do have overhead resistance on this stock again at that 160 level. I'm not super confident this stock or really any stock is going to make it out of these kind of technical patterns anytime soon based on the macro environment that we have going on. Inflation, negative GDP, which we saw come across this morning. My guess is Qualcomm's just going to continue to hit its head on this top end of the trend line and continue to work back, make lower sets of lows, lower sets of highs. Obviously, I believe this stock will bottom out at some point. There is a high probability that it'll be down here at 124. The real downside risk from a technical perspective is obviously breaking 124. And some of you will ask, like, what would break it below 124? Well, all of a sudden kind of missing these revenue forecasts, which are already, I would think, kind of conservative and not really that impressive, kind of mid-single digit growth. If all of a sudden it goes negative or goes to like really low single digit growth, well, obviously a stock like this could absolutely pull back. But as it pulls back, you get a little bit higher dividend yield, especially on the shares that you just more recently purchased. And obviously the valuation just gets more and more attractive. I think there's some downside with Qualcomm if they don't meet these estimates, and certainly if they come underneath them. But this is a company that's well positioned to not do that, actually kind of beat these estimates, continue to buy back shares, continue to pay a dividend, continue really strong performance, and a really well-run company. All things being considered, this is a fantastic company. If you've been invested in this one for a while, you should pat yourself on the back because this is not one of the most hyped up stocks on Wall Street. The fact that you made the decision to buy shares of this company really shows you made really strong decision making, in my opinion. And if you could transfer that to other purchases and other stocks, I think you're going to be a fantastic investor. Hopefully, you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.